Welcome to your daily market breakdown. Today, October 2nd, 2025, the market painted a complex picture of divergence. While big tech pushed major indices higher, a surge in bearish candlestick patterns signals potential turbulence ahead. Are we on the verge of a major tech pullback, and where are the hidden opportunities for smart money to rotate? Let's dive into the signals the market is sending us right now. Today's trading session unfolded with notable gains in large-cap technology, healthcare, and select industrial names. This strength was reflected in the closing numbers, with the Dow Jones Industrial Average, the S&P 500, and the Nasdaq Composite all finishing in positive territory. The S&P 500 added 0.8%, increasing its market capitalization by approximately $350 billion. Despite these headline gains, the market's internals tell a different story. One of caution driven by prevailing economic uncertainty and lingering concerns over a potential government shutdown. Market breadth remained mixed, revealing a significant divergence. While strong leadership from artificial intelligence and cloud computing stocks propelled the major indices forward, a growing list of mid-cap and small-cap stocks simultaneously dropped to new 52-week lows. This selective underlying weakness in certain industries highlights a market that is not moving in unison, demanding a more granular analysis to navigate effectively. The session high for the S&P 500 was reached at approximately 2:15 p.m. Eastern Standard Time, while the low occurred shortly after the opening bell around 9:45 a.m. Eastern Standard Time. A detailed analysis of today's candlestick charts reveals a striking prominence of reversal and indecision patterns, particularly at key market inflection points. These formations reflect a tangible sense of investor caution. The most prevalent patterns observed across equities today were the hanging man, appearing in 1,222 different stocks, followed by the doji and near doji patterns, which were identified in 596 stocks. Bearish harami patterns were also significant, forming on the charts of 259 stocks, while bullish engulfing patterns appeared in 186 stocks, signaling pockets of strength. These patterns taken together highlight the underlying uncertainty and potential for trend shifts, with reversal signals factoring heavily at both local market tops and bottoms. The majority of our sector-level readings were conducted on daily interval candlesticks, a time frame designed to capture the full session's price action and provide confirmed, meaningful signals for swing and position traders. The widespread dominance of hanging man and bearish harami patterns signals potential overextension and trend exhaustion in several high-flying sectors, most notably in technology and other growth-oriented stocks. A hanging man pattern, which we saw frequently today, forms at the top of an uptrend. It looks like a small body at the top of the trading range, with a long lower shadow and little to no upper shadow. This pattern indicates that sellers began to push the price down during the session, but buyers managed to push it back up near the open. However, the selling pressure is a warning sign that the bullish momentum may be fading. Conversely, we observed bullish engulfing and hammer formations in overlooked pockets of value, especially within oversold energy stocks and select industrial groups. A bullish engulfing pattern consists of two candles, where a large green candle completely engulfs the body of the previous smaller red candle, signaling a powerful reversal to the upside. The sharp increase in doji-related patterns across the board further underscores the rising indecision and heightened volatility at current price levels. A doji is characterized by having a nearly identical opening and closing price. It's creating a cross-like shape, and it represents a stalemate between buyers and sellers. Our first sector is technology, which, despite leading index gains, is flashing significant warning signs. The sector is dominated by mega and large-cap names and closed the day with a gain of 1.2%, adding approximately $180 billion to its market capitalization. However, the most frequent candlestick formations were the hanging man and doji patterns. The hanging man appeared in the largest AI and software names, indicating potential exhaustion after a prolonged run-up. From a valuation perspective, many of these stocks are considered overvalued as their price appreciation has outpaced earnings growth. Nevertheless, positive sentiment endures, fueled by powerful AI growth narratives that continue to attract investor capital. Next, We turn to the healthcare sector, where we saw a much more constructive picture. The sector posted a gain of 0.9%, which translates to a market capitalization change of about $65 billion. The major formations here were the bullish engulfing and the morning star pattern, both key reversal signals on the daily chart. A morning star is a three-candle bullish reversal pattern that appears at the bottom of a downtrend, signaling a potential new beginning for an upward move. The sector is considered fairly valued, with selective undervaluation noted in certain biotech subsectors, which are benefiting from a recent earnings rebound and showing renewed investor interest. Moving on to the industrials and manufacturing sector, we observed a more nuanced session. This area saw a modest increase of 0.6%, representing a market capitalization change of roughly $40 billion. The key patterns here were the doji and the hammer, which often formed near the session lows. A hammer pattern is a bullish reversal signal that looks like a T, with a small real body at the top and a long lower shadow. It indicates that sellers drove prices down, but a strong wave of buying emerged to close the session near its high, rejecting the lower prices. Valuations in this sector are mixed. However, several mid-cap manufacturing names have been highlighted as undervalued, trading at below-market multiples and attracting attention from value investors. Finally, let's examine the financial sector, which is showing signs of a potential topping formation. The sector ended the day nearly flat, with a slight decrease of 0.1%, or a market capitalization loss of around $15 billion. The predominant patterns were the bearish, engulfing, and hanging man formations, which appeared with notable frequency near recent sector highs. A bearish, engulfing pattern occurs when a large red candle's body completely swallows the previous green candle's body, indicating that sellers have overwhelmed buyers and a reversal to the downside is likely. The valuation picture here is varied. Select regional banks are considered slightly undervalued, presenting a potential opportunity. But the larger money center banks remain at fair value given the ongoing uncertainty surrounding interest rates. Today's investor sentiment can best be described as cautious and increasingly selective. While enthusiasm persists for the growth stories in AI and large-cap technology, many market participants are exhibiting clear risk aversion. This is evidenced by the surge in defensive formations and reversal patterns seen across smaller capitalization sectors. The technical outlook strongly indicates the potential for profit-taking in overbought technology stocks. Simultaneously, rotational money flow appears to be favoring the undervalued industrial and select regional banking sectors, where bullish patterns are beginning to emerge. In conclusion, today's market action reveals marked divergences that demand careful attention. We have a heavy concentration of bearish signals like the hanging man in high-flying large-cap technology stocks, hinting that a period of profit-taking may lie directly ahead. At the same time, bullish reversal patterns and attractive undervaluation opportunities are proliferating in the industrials and select financial sectors, particularly among mid-cap and small-cap names. Analyzing the daily candlestick intervals provided the most accurate view of sector sentiment, confirming that the market remains highly selective and nuanced in its rotation. Astute investors are closely monitoring these developing patterns for tactical sector rotation and to identify the next wave of opportunities in this complex trading environment. Thank you so much for watching. I hope this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, subscribe, and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.